All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today is August 5th, 2025. And the top story this morning is earnings from several companies, but in particular, we got Palantir, and then we got a whole bunch of consumer and household names. And, the earnings picture this morning just beautifully captures the state of the economy. Anything that even sounds like AI is just reporting blowout numbers. And of course, people are bidding these stocks into seemingly psychotic altitudes, multiples. And then you've got everybody else who at best is doing just okay. Most of it sucks. And that pretty much encapsulates the state of the economy everywhere in the whole world. And unless you're in the AI business, you're struggling right now. Case in point, Palantir. They reported earnings after the bell yesterday. Now, look, Palantir is one of those names. Nobody really knows what they do. They talk about AI. They have a lot of government contracts. We know they're up to some shit. We don't really know exactly what. But look, their sales up 48% year over year. Phenomenal growth, 48%. That's amazing. Their revenue numbers crossed $1 billion for the first time. Amazing numbers. They raised their outlook. Their government revenues up 53%. That is tremendous. Commercial contracts up 93%. So their AI services they're doing for enterprise, that's doing very well. These firing on all cylinders over at Palantir. There's no ifs, ands, or buts about it. All right. Palantir's business is booming. That being said, their adjusted earnings were 16 cents per share. The stock is now trading at $170. Yo, that is a price to earnings multiple of over 1,000. Palantir, you're drunk. Amazing growth. I get it. And when you have good growth numbers, higher valuations are justified because you start to value based on forward earnings, not on these earnings. But 1,000 times earnings, you think maybe you guys took this one a little too far? Just going to throw it out there. Maybe you guys are getting a little bit over your skis at 1,000 times earnings. Hey, I just throw it out there. And look, $400 billion in revenue, The stock is trading at 400 times revenue now. All right. You just crossed $1 billion in revenue. The market cap of the company is about to be about $400 billion. So you're trading at 400 times sales. Let's talk a little perspective here. All right. At 400 times sales, we're going to tap into that old Sun Microsystems CEO energy. Let's say hypothetically you run a really tight ship and your personnel cost, your payroll is zero. Let's say you own all your buildings and there's no property taxes. So your property cost is zero. Let's say you don't have the power company loves you. They give you free electric for what you're doing. Your power costs are zero. Let's say hypothetically you owe nothing in taxes. The government is very beneficial. Zero. Let's say all of your expenses are zero. All right. In the perfect world, what an amazing business. Let's say hypothetically we get there. If you buy the stock today and they start paying you 100% of revenues in dividends, it's going to take you 400 years to make your money back. You got that kind of time? I don't. Palantir, WTF. Amazing numbers. Stock is drunk. Now let's contrast that with what we're getting everywhere else in the economy. This morning, we got earnings from Caterpillar. All right. Mixed earnings from Caterpillar. They're a big, heavy equipment maker. Tariffs taking a big chunk out of them. Their sales were up 1%, but their profits were up 18%. Okay. Things look okay there. They're talking about the steel tariffs taking a big chunk, about $1 billion, $1.5 billion. Energy and transport was okay. Little bit of growth in energy and transport. Construction and resource industries are in decline. We're not building things, and farms and mines not ordering new equipment. Then we got Yum Brands. That's the owner of Taco Bell, Pizza Hut, KFC. Big miss for Yum Brands. Same-store sales up 2% year over year. All right, same-store sales growth is nice, but that same-store sales growth is below the rate of inflation. And so they're actually selling less stuff there. Consumers are cutting back. They're having to spend more money on marketing in order to pump out the the ad campaigns for their affordable value meals. McDonald's did their $5 value meal. It was very successful. Now everybody's trying to duplicate that result, trying to get cash-strapped consumers in the door. It's not working so well for Yum Brands. We also got Marriott hotels. Let's see, their revenue per available room was up 1.5%. That's a very big statistic in the hotel business. RevPAR, 1.5% growth. Again, not keeping pace with inflation, not even close. You got their luxury segment is doing well, but government travel, business travel is way down. And of course, consumers, tourism is down also. So, unless you're super rich, you're not doing very well over with Marriott. Molson Coors reposted their earnings. Weak demand. People aren't drinking as much. 5% year-over-year decline. Aluminum tariffs taking a chunk out of Molson Coors. So look, the construction business is okay or down. The restaurant business sucks. The beer business sucks. The hotel business, unless you're catering to the super rich, your business sucks. And then contrast that with what Palantir is doing. That is the state of the economy, but people just keep bidding up these valuations. In absence of catastrophic news, number go up. Sooner or later, there is going to be a reality check. But as we often say here, it is not this day. Now, we've also got some interesting news going on in the world of chips this morning. There's a little bit of corporate espionage playing out, or government espionage. Taiwan Semiconductor is reporting that they had some of their trade secrets stolen. They're being kind of hush-hush about it. They're saying it pertains to their 2-nanometer fabrication methods, which is their cutting-edge chip fabs. They're not saying who did it, but let's be honest, we all know it was the Chinese, because whenever there's corporate espionage, it's always the freaking Chinese. I don't think I'm being a little too presumptuous in assuming that. The last 2 big trade secrets that were stolen over at Taiwan Semiconductor, it was always Chinese employees that were arrested. And at the same time, the United States is now considering putting location trackers on their AI chips, in particular NVIDIA chips, to try to figure out how they're getting into China. We all know how they're getting into China. They're being shipped to Malaysia, billed to Singapore, and then sent to China from there. The Chinese are not happy about the U.S. putting backdoors in the chips. And, well, cry me a river, because Huawei has been doing more backdoor than a Lilly Phillips marathon over the last couple of years. I don't really feel bad about the government saying we're going to low jack AI chips. I mean, I don't like governments tracking this stuff, but let's be honest, they've been backdooring everything they sell into our markets for years anyway. And if you don't like it, well, look in the mirror. We got an interesting story. The Swiss president is on a plane as we speak, crossing the pond, heading over to the United States, scrambling to cut a trade deal before these 39% tariffs on Switzerland go into effect. Now, this is kind of interesting because the whole narrative in the mainstream media has been the rest of the world is just giving the finger to Donald Trump. Nobody cares about the trade deal. He's just shooting himself in the foot. Everybody cares. They're all laughing at him behind his back. That doesn't really jibe with, oh my God, quick, get on a plane. Let's fly over to the White House and be banging on his door to stop him from putting tariffs on our economy. Look, I'm not, tariffs is not like all good. There's plenty of bad that comes along with it. It's going to drive up consumer prices. But the way this story has been told in the press has been much like any other story affecting Donald Trump. You start with your orange man bad thesis, and then everything radiates out from there. Hey, if we can tell the truth along the way, great, but that's just a nice to have kind of thing. Let's be a little bit more honest about it. The Swiss are panicking right now because of the tariffs that President Trump threatened to put on them. And right now, they are very eager to come over here and offer the United States something it wants in exchange for that to not happen. Don't expect to hear any of that being discussed in the press, though. Now, the reason that's important, however, is because of gold. The biggest source of our trade deficit with the Swiss is gold. It's about 2/3 of it. And they're saying one of the possible results of this could be a big tariff on gold imports. Look, a lot of the run we've seen in precious metals this year has been because of the fear of tariffs on gold bullion products that hasn't materialized yet. And I'll be honest with you, I don't know what the hell that's going to do to the gold market, but so far it's been very bullish for gold prices. We've got Country Garden is back in the news this morning. They're looking for another delay in their liquidation. Hey, this is like our 6-month reminder that there's still no price discovery happening in the Chinese real estate market, or our own real estate market for that matter. That's still out there. And we got trade deficit data this morning. The trade deficit shrank again last month. Imports are falling substantially. Exports are down, but only a little bit. Again, kind of flies in the face of the narrative of the trade war that's been spun in the press. A little bit of honesty would be appreciated in that regard. I get it. You know, you don't like the orange man. You know, everything he does is bad. But come on, guys, let's be reasonable about this. You know what? We got a lot to talk about today. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. And hey, don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button because we do this one every day. Unless there are technical difficulties like there were yesterday. So far, we seem to be working out today. Anyway, yeah, like and subscribe, all that good stuff. For now, the S&P 500 is positive by 5 points ahead of the opening bell, 0.07% higher, just barely in the green. We've got the Dow has actually swung negative here, down 16 points, 0.04% in the red. But the NASDAQ leading the way higher, up 0.21%, 47 points to the upside. I think Palantir is probably driving the NASDAQ this morning. That's the big story over in the tech world. We've got a modestly stronger dollar here, 98.96. That's higher by 21 basis points. That's going to put a little bit of downward pressure on asset prices. Looking over at the bond market, we've got very little movement in the bond market once again here. The 30-year Treasury's at 4.809. That's higher by about 1.5 points. The 10-year's at 4.217, higher by a fraction of 1 point. The 2-year, meanwhile, is up almost 3 points at 3.710. And the 1 month little changed at 4.366. That is down a fraction of a point. Looking over at the commodities board, we've got gold is down just a tick this morning. Spot gold, $3,369. That's off by about $4 or 0.13%. Spot silver, meanwhile, is catching a bid here, $37.51 for spot silver. After having a pretty good day yesterday, we're up by about a dime this morning, 0.26% higher. I like the shiny. Copper, meanwhile, is lower by 0.6%. Platinum is off by 1.6%. Palladium down by 1% and change. And crude oil is lower by 1.5%, $65.26 for September WTI crude. Bitcoin still kind of down in the doldrums here, 114,075, relatively unchanged from where we were yesterday morning, down from that pattern we were trading in for a couple of weeks. But noteworthy, Bitcoin continues to stay above its 50-day moving average. We'll let you know if that one changed. For now, that is providing support. All right, let's talk about the Palantir earnings here. Palantir reports sales up 48% and cites astonishing AI impact. Look, guys, this was just a really good result for Palantir. Palantir Technologies reported a 48% increase in revenue for the second quarter to more than $1 billion, citing the astonishing impact of artificial intelligence technology on its business. The data software company also raised its revenue outlook for the full year to a range of $4.14 billion to $4.15 billion, exceeding analysts' prior expectation of $3.91 billion. Palantir shares rose about 5% in pre-market trading, putting the stock on track to hit an all-time high when New York opens up. Denver-based Palantir has seen its stock price surge more than 500% over the past year, buoyed by high expectations from investors, growth in demand for AI tools, and a deep reach into both the private and public sectors. In a letter to shareholders, Chief Executive Officer and insufferable douche Alex Karp lingered on the company's at times tenuous relationship with Wall Street. The skeptics are admittedly fewer now, having been defanged and bent into a kind of submission, he wrote, almost Trumpian in his language here. He also said that AI breakthroughs had helped fuel Palantir's growth, pointing to the development of large language models and the chips required to power them. Going forward, Karp said that Palantir planned to be the dominant software company of the future and added that the market is now waking up to this reality. We continue to hear from experts that Palantir maintains unique market positioning for monetizing AI technology amid a noisy, crowded, and hype-laden market. And the company's Q2 2025 performance further validates this segment, said Third Bridge analyst Jordan Berger. Now, look, Palantir's earnings here. I mean, this stock is up 7.3%, $172.51. Guys, they just reported 16 cents of earnings. I mean, the multiples are getting a little nutty here. Again, impressive numbers, impressive growth. Market cap $379 billion. Guys, they're projecting $4 billion in revenue for the year. So what are we trading at 100 times revenue here? Come on, guys. getting a little nutty here. I get it. The AI thing is doing well. Palantir's making money. Nice growth in their government contracts. Nice growth in their enterprise contracts. 100 times sales, though. Well, we'll see how that one turns out. Meanwhile, Caterpillar, their Q2 2025 slides. Profit jumps 18% despite tariff headwinds. That's kind of a mixed title here. Their profits up 18%, but it's their second quarter slides. So what's going on at Caterpillar? Caterpillar released its second quarter 2025 financial results on August 5th, showing improved performance compared to both the previous quarter and year-over-year metrics. The heavy equipment manufacturer posted an 18% increase in operating profit despite facing significant tariff pressures that are expected to impact full-year results. I suspect those steel tariffs are taking a big chunk out of Caterpillar. That heavy construction equipment uses a lot of steel. The company shares were trading down 3% in pre-market trading. All right, let's see what's actually going on here. Different segments performed differently. Performance varied significantly across Caterpillar's business segments, with energy and transportation emerging as the clear standout. Energy and transport posted a 7% increase in sales to $7.8 billion and a 4% rise in segment profit to $1.6 billion. This positive performance was driven by higher sales volume and favorable price realization. They increased their prices, though partially offset by unfavorable manufacturing costs, primarily related to tariffs. In contrast, the construction industry experienced a 7% decline, mostly due to China. That's in sales down to $6.2 billion, with segment profit dropping 29% to $1.2 billion. The decline was attributed to unfavorable price realization, lower sales volume, and, of course, the impact of higher tariffs. And the resource industries also faced challenges with a 4% sales decrease to $3.1 billion and a 25% profit decline to $537 million, similarly affected by unfavorable price realization and tariff impacts. So very much a mixed quarter from Caterpillar. Energy and transport doing well, everything else not even close. Right now, the stock is down about 1.7% ahead of the opening bell, $426.51 for Caterpillar. Year to date, though, the stock is up almost 20%. So, a little bit of that profit increase was priced in, you could say. Now, looking over at the restaurant business, things not going so well there. Taco Bell parent Yum Brands misses estimates as spending slows and costs rise. That almost sounds a little stagflationary there. Yum Brands missed analyst estimates for second quarter comparable sales and profit on Tuesday, hit by higher ingredient costs and muted demand that weighed on its business, including Taco Bell. Concerns over the impact of steep tariffs and economic growth have dented U.S. consumer spending on eating out, prompting fast food chains, including Yum Brands, McDonald's, and Burger King-owned restaurant brands to launch budget-friendly meals deals to boost foot traffic. That paragraph right there is incredibly misleading. The restaurant business has been in dire straits for the last 3 years. It is not concerns over tariffs that has people not eating out. People aren't eating out because they're freaking broke, because the cost of living went up by 30% and their wages did not rise. This is not a 2025 story. This is a 2020 story. Look, Yum Brands, tariffs is not impacting freaking Kentucky Fried Chicken or Taco Bell, guys. It just isn't. All that stuff is sourced here. It's the consumer is in bad shape. Let's see. Taco Bell accounts for 38% of the company's total revenue. Rolled out meal boxes ranging from $5 to $9. Still, its same-store sales growth in the U.S. slowed to 4% during the second quarter from 5% a year earlier. Worldwide, same-store sales rose 2% during the quarter ended June 30th, while analysts on average estimated a 2.37% increase. That 2% same-store sales growth not keeping up with inflation, so less things being sold at their restaurants. Excluding items that earned $1.44 per share, missing estimates of $1.46, owing to increased advertising and promotional expenses, as well as still high input costs. Total costs and expenses for the quarter were up 13%. There's that higher advertising spend at Yum Brands. That stock down about 2.1% ahead of the open, trading at $144, down about $3 this morning. Meanwhile, we've got Marriott profit beats estimates fueled by international hotels. Again, this one, they beat estimates, but not really by a big margin and not very impressive numbers. Marriott reported second quarter earnings that beat expectations as the company's global footprint made up for softening U.S. demand. U.S. hotels U.S. hotel companies have been on a bumpy ride this year with softening consumer demand leading to slower bookings. Marriott's revenue per available room was up 1.5% in the second quarter from a year earlier. That's important there. Revenue per available room, or RevPAR, that is the most important statistic in the hotel business. That going up 1.5%, not keeping up with the rate of inflation. And again, that's a revenue number, not an earnings number, which means fewer rooms getting booked. RevPAR for the U.S. and Canada was unchanged from the year before. Growth was strongest in the Middle East and Africa, where RevPAR climbed 14%. In the U.S. and Canada, the luxury segment was still strong, but reduced government travel and softer demand for business trips weighed on profitability, according to CEO Tony Capuano. So Marriott not doing so hot here. Down 0.6%, $257.50 per share. Could be a lot worse for Marriott, all things considered with those numbers, although the stock down about 7.1% already year to date. So we're going to add to those losses today. And the beer business is also not doing well. This story was just depressing as all get out. Molson Coors cuts outlook again on weak U.S. beer demand. Molson Coors lowered its full-year guidance for the second quarter in a row, citing continued pressure from a weak consumer, falling U.S. market share, and rising costs tied to aluminum tariffs. The company now expects underlying earnings per share to fall as much as 10% this year compared to earlier forecasts for growth. The brewer also cut its sales outlook. Beer sales fell again. Molson Coors shipped less beer in the Americas, with U.S. sales down more than 5%. The company blamed weak demand, losing market share, and the end of some brewing contracts. And again, guys, I've mentioned this before, the decline in alcohol consumption and the decline in the fertility rate in the United States and elsewhere, I am beginning to think these two things might be related. Come on, everybody, let's drink up and make bad decisions. The fate of the world depends on it. But for now, Molson Coors, that stock is down 1.3%, $48.01, off by about 64 cents. And year to date, this one is down 15.2%. Again, it's a sad day for the beer industry. A moment of silence for Molson Coors. Meanwhile, we got some espionage going on this morning. This is an interesting story. World's largest chip maker, Taiwan Semiconductor, says it has discovered potential trade secret leaks. Oh, those zany communists in China, they're at it again. Taiwan Semiconductor Manufacturing said on Tuesday that it had detected unauthorized activities that led to the discovery of potential trade secret leaks. The world's biggest semiconductor manufacturer told CNBC that it had taken strict disciplinary action against the personnel involved, and that it has also launched legal proceedings. Taiwan Semi maintains a zero-tolerance policy toward any actions that compromise the protection of trade secrets or harm the company's interests. Such violations are dealt with strictly and pursued to the fullest extent of the law. We remain committed to safeguarding our core competitiveness and the shared interests of all of our employees. Citing multiple sources, Nikkei said that on Tuesday, several former employees of Taiwan Semiconductor are suspected of attempting to obtain critical proprietary information on 2-nanometer chip development and production while they were still working at the company. Production of the 2-nanometer chip is among the leading-edge manufacturing processes in the semiconductor industry currently. Taiwan Semiconductor said it did not have any additional information to share when asked by CNBC about the Nikkei report. It's not the first time that Taiwan Semi has been the target for potential theft. In 2018, a Taiwanese court indicted a former employee for copying trade secrets related to the 28-nanometer fabrication process with intent to transfer them to a semiconductor company in mainland China. In 2023, ASML, which makes machines that are required to manufacture the most advanced chips, said that it discovered that a former employee in China had misappropriated data related to its proprietary technology. You guys noticing a pattern here? Hey, China, why don't you design your own crap for a change? Just saying. Oh, just go ahead. Keep stealing intellectual property left and right and then complain when you get tariffs put on you. Go ahead. Good luck with that. Meanwhile, the U.S. explores location trackers for AI chips. I guess the Commerce Department is sick of these things ending up in China, and they're going to start low-jacking GPUs. Apparently, that's on the docket this morning. The U.S. is exploring ways to equip chips with better location tracking capabilities, a senior official said, underscoring Washington's effort to curtail the flow of semiconductors made by the likes of NVIDIA to China. Washington has espoused working with the industry to monitor the movement of the sensitive components, part of a broader plan to curtail smuggling and ensure American technology remains dominant. Last week, Beijing summoned NVIDIA representatives to discuss U.S. efforts around location tracking and other alleged security risks related to its H20 chips. Yeah, China said, hey, low-jacking chips and backdooring systems, that's our job. You're not supposed to do that. That's what we do. Yeah, okay. Crimea River, China. Meanwhile, the whole Chinese real estate collapse. Remember that story, that thing that's been going on for like 5 consecutive years now? Still happening. Country Garden seeks to delay a wind-up case to later this year. No, it's not Groundhog Day. Yes, we have seen this story a half dozen times already. You know what? As long as we just delay this thing by 6 months in perpetuity, then it's almost like nobody ever loses any money, right? Isn't that how that works? Country Garden Holdings plans to ask Hong Kong's High Court to delay its liquidation case until later this year. People familiar with the matter said a move that would give the Chinese developer more time to work on its restructuring. The company intends to apply for the adjournment this week and will need its creditors to provide a letter of support for schedule change. According to the People, the next hearing in the case was originally set to be held on August 11th. It will be up to the court to decide whether to grant an adjournment and for how long. Guys, this company went bankrupt in 2023, and they went bankrupt years after the Evergrande bankruptcy and after all of that started. I mean, this thing is just being dragged on and on and on. They're trying to avoid liquidation because they know when they sell the company's assets, it is going to be a price discovery shock, and that it's going to devalue all the remaining assets and all the other developers, and they're just pushing this thing along, kicking the can down the road 6 months at a time. And don't worry, maybe things will get better if you just wait another 6 months. It's only been, 3 years now? Okie dokie. Meanwhile, this one's kind of interesting. Swiss president dashes to Washington in attempt to sway Trump. And I just know Bloomberg, they were just grinding their teeth when they wrote that headline. But thank you, Bloomberg, for a little bit of honesty this morning. Swiss President Karen Keller-Sutter is flying to Washington on Tuesday in a last-minute bid for a deal to lower the 39% tariff imposed last week by Donald Trump. The trip is to facilitate meetings with the U.S. authorities at short notice and hold talks, the government said in a statement. Gee, they almost sound desperate. Keller-Sutter's office declined to say whether she expects to meet the American president and what trade concessions she might bring before Thursday's deadline to implement the levy. Now, here's the interesting thing. Switzerland, there's a couple of different ways they could do this. The Swiss are supposed to be buying F-35s. This article mentions, hey, maybe they'll pay more for the F-35s. The U.S. has been trying to raise the price. Maybe they'll buy a few more planes. Maybe the Swiss will lower some of their agricultural tariffs. They put 5% tariffs on our ag products. Of course, they might buy more U.S. energy. But it's the gold thing that really caught my attention. Trump's aides claim that Switzerland's outsized trade deficit with the U.S. is why the president imposed such high levies. On average, 2/3 of last year's $38 billion deficit was due to shipments of bullion. That's because of the price of the metal itself rather than any added value by Swiss refineries, which largely focus on resizing bars. And this chart right here is showing you, guys, in yellow, that is U.S.-Swiss gold. And then the black line is the U.S.-Swiss total trade balance. And you can see over the last few years, almost, with the exception of this latest quarter, almost all of the trade balance has been gold bullion. And that's interesting here because of what they're saying. Gold is special, said Simon J. Evnet of IMD Business School. It isn't really manufactured in Switzerland. Processed is a better word. One fix could be a high tariff, say 50% just on gold, hitting refineries, but with a limited, wider economic fallout. Alternatively, handing over bullion trade to the central bank or another state institution could provide a justification for taking it out of statistics on both sides of the Atlantic, but it's not clear if this would appease Trump. So they're saying, okay, we could put just tariff gold, 50% tariffs on gold. That would close the trade gap. I don't know what that would do to the gold market here. My guess is it would send gold prices higher. At least that's what's been happening so far this year. But nothing like this has ever happened before, so nobody really knows what the end result would be. But the other thing that's interesting is they're like, maybe we'll just have the central bank take it over, and then for whatever reason, we just won't count it as part of the trade deficit. We'll just change the way we measure things and pretend like we made progress. Keep an eye on this story, guys. This could have an effect on the gold market. Honestly, I just don't know, but it's worth watching. And last but not least, on the trade front, we got the U.S. balance of trade, net exports in the United States. I guess the term we'll use is they rose to negative 60.2 billion. That is from a more deeply negative 71.7 billion in May. So look, guys, the trade deals or lack of trade deals, the trade war, whatever you want to call it, we have seen the trade balance improve dramatically over the last few months. Now, you could argue that the reason the trade balance got so bad in the months before that was people front-running the trade war. So are we just back to normal? Well, we're a little bit lower than we were before. The trade deficit is shrinking, but let's keep this in perspective here. Zoom out 5 years, guys. And yeah, the trade deficit is shrinking, but it's shrinking to about where it was a year ago or 2 years ago. And if you zoom out even more on a 10-year chart, you can see the trade deficit has been very deeply negative for most of this decade. And we have a long way to go just to get back to pre-COVID levels. So there has been some progress, but it's been very little, and there's still a long way to go. Anyways, that slight decline in the trade deficit, it was driven almost entirely by a drop in imports. We went from 350.5 billion in May down to 337 billion in June. We are importing less stuff, in particular, importing less stuff from China. Now, there has been some retaliation in the trade war, and we have seen our net exports or our exports go down, but very little, from 278 billion down to 277 billion. So a little more than a $1 billion decline in our exports with a $10 billion decline in our imports. So the trade situation is improving. We don't yet know, though, what the tariff war and the trade war is going to do to consumer behavior in the United States. If those tariffs lead to higher consumer prices, which they almost certainly will, then we're probably going to see a reduction in consumption, which coincidentally, several steps removed, could eventually result in deflation, believe it or not. There's a lot of focus on the inflationary impulse of tariffs. But if tariffs result in demand destruction, then you could actually see a deflationary impulse in the economy. But that's going to take a while to play out. And I just want to say thank you very much to Zeeble Fritz. Mr. Z, thank you so much for donating that Nobody Special Finance membership. Some lucky melonhead out there just got themselves a membership. Be sure and say thank you, whoever you are, to Zeeble Fritz. And thank you, Z, for supporting the channel, sir. Chuck G has been a melonhead for 3 months. What's going on, Charles? He says California is legalizing. Oh, honestly, I don't know enough about this AB 495. If it's the one I think it is, I haven't followed this one that closely, so I can't comment. There is something going through California's legislature that's pretty sick, pretty disgusting, but child trafficking may be a stretch. Guys, I just don't know enough about this one. That being said, California is going to do what California is going to do, guys. I don't know what to tell you. Thank you, Charles, for being a Melonhead member for 3 months. He's back again. He says, I know AI is a bubble, but products like Notebook by Google AI is a good breakthrough on self-training with an LLM. I sent you how on Twitter. I did see that message yesterday, Charles. Thank you for sending me that. I will look into that. Look, a lot of Google's tools, if you're capable of self-educating, like YouTube University is amazing. There's so much you can learn on YouTube. Honestly, like there is like next to nothing I learned in college that I couldn't also learn on YouTube, mostly because I really didn't pay attention in most of my calculus classes. That being said, I'm sure this works. I haven't tried Google Notebook, but I'm going to look into it. And hey, using an AI bot to train yourself, as long as it's teaching you the right things, you got to verify what it's teaching you. These things hallucinate and they just make things up. And there's really no way to differentiate between the two other than to go out and to verify doing your own research to make sure what these things are telling you is accurate. I can tell you guys, I do a lot of research and I am learning to ignore Google's AI results because half the time what Google tells you is either way out of date or just outright incorrect because some guy said a thing on Reddit 10 years ago. So be very careful with what the AI is telling you, guys. So many people, professionals, attorneys are getting themselves in trouble repeating the shit that the chatbots are telling them that is not true. Avoid yourself some embarrassment. Thank you very much, Charles, for supporting the channel. Thank you also to Welco Services, who says, don't forget to wish Janet Yellen a happy birthday on the 13th this month. She likes speaking fees for gift IDs. For gift ideas. Oh, speaking fees for gift ideas. All right. Well, here you go, Janet. Here's your birthday present from me and the Melon Heads to you. So, oh, good. Is this speaking fees? Am I going to get $4 million for giving a speech at Goldman Sachs? Let's see. What do we have here? Let's open up the envelope. It's a 1-year subscription to the Jelly of the Month Club. Well, Janet, that's the gift that keeps on giving all year long. Thank you so much for your excellent work over there at Treasury and the Federal Reserve. Thank you, Welco Services, for supporting the channel. Robert Feeds the Machine says, what's your opinion on taxing capital imports as an alternative to tariffs? Why would you want to tax capital coming into your country? The whole point of trade policy and economic, you want capital coming into your country. I have no idea why we would want to tax something like that, to be honest with you. Nope, I'm not big on that. As an alternative to tariffs, look, the libertarian in me does not like tariffs. I am a free trade kind of guy. That being said, we don't have free trade, all right? You cannot have free trade with a country that steals your intellectual property with reckless disregard and you have no legal recourse. That's not free trade. That's legalized theft, all right? That's anarchy. So, generally I think of tariffs, I'm like, no tariffs. I don't like that. And some of the tariffs that we're talking about in some of the other countries, especially like countries we have trade surpluses with, tariffs don't make sense to put tariffs on countries that you have a trade surplus with. The other thing, though, with what we've done in the vital industries that we've outsourced to China, combined with the increasingly high likelihood that we end up in a kinetic war with the Chinese at some point in the next 10 years, it's insane to continue down the path that we're currently on. And if it's going to take tariffs to get our industries to reshore production of things like medicine that our people need to freaking survive, in that case, it's justified. And that's why I have generally been in favor of the trade war. We've gone about it haphazardly, recklessly. I get it. Liberation Day was a fiasco and the bond market threw a fit. That being said, sitting around and waiting for the Chinese to cut us off from medicine or cut us off from rare earths is suicidal. It's idiotic. And, if people are like, oh, we can't do this, my S&P earnings, I'm really worried about Blackstone's bottom line, not about the thyroid medication I need to survive. Yeah, sure. No problem. So that's generally my attitude towards tariffs. Now, capital imports, you want capital flowing into your country. That's where the investment comes from. So no, I am not at all in favor of that. Thank you very much, Robert Feeds the Machine, for supporting the channel. Nashville Pasta Man says, on and on and on and on. The beat don't stop until the break of dawn. The Country Garden theme song. Good morning, Jackster. Well, you're a poet and you don't know it, Pasta Man. Thank you very much, sir, for supporting the channel. Yeah, that Country Garden theme song, you got to love that, right? If we never actually liquidate the company, then we never actually lost any money. It's magic. That's how it works, right? Did they teach us that in Keynesian Economics 101? No? Oh, okay. I guess they didn't teach that. I don't know. Just spitballing here. How about if we never sell, we never actually lost any money? Like those Beanie Babies I bought in 2002, they're still worth $300,000, right? I didn't buy Beanie Babies. I think you guys know that about me by now. I did not buy Beanie Babies. My Beanie Babies are shiny, all right? That's what I like. And as long as the whole world is jumping through every hoop imaginable to avoid price discovery on bloated asset valuations, then I shall continue to like the shiny. Thank you very much, Pasta Man, for supporting the channel. And thank you, everybody, for having your coffee with the Melon Heads this morning. Appreciate that very much. Hey, don't forget those like buttons and them subscribe buttons on the way out for the YouTube algorithm, should you feel so inclined. Also, thank you very much, guys, for all the super chats. And thank you to my Patreon supporters for supporting the channel. Links down below. Also, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.